Hello, hello. Hi there, hi there. A very good Tuesday evening to everyone who has been on Traders Talk. All right, okay, good, good. Let me just check. All right, great. Okay, great to see you again, and of course, wishing everybody happy Chap Gomei, and today is the 15th day of Chinese New Year. Yeah, it's we have actually gone 2 weeks in celebration, in celebration for the Tiger Year, and hope everyone had a great time with their loved ones and their family, and continue to be safe. Yeah, although we see a lot of people contracting the not so good virus during this time where we meet more people and we actually converge more. Yeah, of course. This is, I think, going to be part and parcel of our daily life. I mean, some things we cannot avoid. Of course, we have to also take a bit more precaution. All right, great. So today we are going to have actually a very good topic, and actually today I'm very excited. Also, uh, because for the first time in many weeks, I see that the S&P futures, that means the futures before the market open, right? We watch the futures mini S&P, right? And the futures is actually up, and is up a lot. Normally we would see it in red, right? And actually this just now before the show started, I think it was actually up by about 63 points. 63 points. Can you imagine? uh, a long time we have not even seen the market going up by 63 point even for some few minutes. And in fact today the market has actually shown a very bullish signal pre-market, and of course I think this would actually give a bit more confidence to the market players and also the investors, right? To hope to actually see that the bad days for the S&P and also the Nasdaq is going to hopefully end with a trend reversal coming in soon. Yeah, and of course, the past weeks we have been there have been actually many news events, and also many not so nice events, like the inflation news which came off last week. 7.5% inflation, yeah, CPI, yeah, and of course that is actually very very high, and of course this kind of data would not be liked by the Fed, because the Federal Reserve, right? I mean, one of their objective is to actually also to manage to curb this inflation, in manage to curb the inflation, and the strategy, and of course the tools which they actually use is to actually hike interest rate, and of course when interest rate hikes, no investors would actually like to see interest rate hike, because that will of course have an effect on business, and also have an effect on the cost of business, of course, and the other one is of course valuations of companies in the market. Yeah, because the rates are actually used as a basis to discount their cash flows, their future cash flows. Yep. So these are the things which has moved the market for the past, I think, many months. And of course, the last week the Fed came out to say they are going to hike 1%. 1% rate, and of course that sparked a lot of fears in the market, and another sell down after half of mid of last week. After mid of last week, similar to the earlier week, it's also the same pattern, where the first 2 or 3 days for the week, the market was actually quite bullish, and of course the second half of the week, the market has actually retraced and had a sell off. Yeah. So yesterday the market, if you have actually look at it, is actually a bit different. It's a bit different because normally the Nasdaq and also the S&P 500, right, move more or less alongside each other and in the same trend and if you actually notice yesterday itself, right, the how to say, Nasdaq has been predominantly, I would say, quite positive yesterday. Quite positive yesterday. Although during certain times you see that the S&P 500 has gone into negative territory, means that it has actually gone down, right? Negative from the opening, right? But on the Nasdaq side, we still see that the Nasdaq is actually still in green. The Nasdaq index 100 index is still in green. Okay, so this is something which is a bit different, which I noticed, which showed yesterday, and of course today itself, both the S&P 500 mini futures is up by 62 points, and also Nasdaq is also up. The futures is also up by 278 points. Yeah. Not only that, even the Dow is also up 370 points. So all so far, pre-market, everything is up, and you can see also the gold is down. Yeah. And of course, in the past days when all these indexes is in the red, right, you see that gold is actually in the green. But now it seems that there is a slight change in trend, and hopefully this trend continues uh, for the week, for this week, and of course subsequent weeks ahead, all the way up till mid of March, where the news for the interest rate, not the news lah, the actual hike will actually come in. Yeah. Okay, great. So for those who have actually joined in, welcome, and please like and share so that more people would actually benefit from our traders talk. I think we had this show for quite a number of weeks. I think this is probably the 30 over weeks we actually had this, and of course throughout all the weeks we had together with you guys and those who have actually followed us. I hope that they have actually learned quite a lot of things through our traders talk and the information which we actually share. Yeah. So both things we share. One is of course on the market. How is it actually going to? How is the market and what are we expecting on the market? And of course, the other things we also share technical knowledge for those people who actually want to learn trading, and also for those people who actually want to go deeper and become better in trading to actually generate income and also grow their investment and also their trading portfolio. Yeah. So this is the show where you can hook onto us, and of course, even the past shows are all on our Facebook page. You can actually go and actually look at the contents, and then basically those which you are interested in, please by all means review them, and of course please also put some comments, and if you like them, give us a thumbs up, and of course also share with more people so that they can also benefit. Yeah. So let's put in here. Okay, so today we are going to actually cover how to 2x your capital, and basically we will actually cover a bit of the basics understanding of capital management, and also how you can actually work towards building your capital and also your investment. Yeah. So we're just going to touch the basic, because the basic is always the most important fundamental for people who actually want to start. And of course, there is actually no quick and fast ways to actually get rich the next day, right? And all this actually takes knowledge, takes information, and also need to have a bit of hard work at your end. Yeah. All right. So this is actually on the market S&P, right? Yesterday it actually closed only about how many points? 17 points. 17 points up or down. I think it was. Let me just check. Maybe it's better for me to actually share with you the chart instead. Let's share this. Okay, so this is the S&P, right? Let's put it here. Okay. Actually, yesterday it closed 17 points down. Yeah, 17 points down. And of course, you can also see that again the volatility was still there up till yesterday. And earlier part again, the market was, I think it was actually down earlier part of the day, and then of course later it went up again, and then towards the end it was relatively, I would say, unchanged. It was relatively unchanged. Yeah. So I mean, these are the normal things which we have actually seen. At least yesterday was quite good, quite good. I mean, we did not see much how to say we did not get so much pain from yesterday's the market movement, yeah, because the portfolio was more or less unchanged. Our portfolio was more or less unchanged. In fact, we did miss some opportunities when the market was actually going up. When the market was actually going up, we missed some opportunities to actually sell off. I mean, take some profits off, take some profit off for some of the stocks which has also rallied together with the intraday movements of the market up. Yeah, because I recall there was one position on this Roblox, right? Roblox where I was queuing to actually exit the position, and as usual, I mean, we wanted to have another. I think it was probably about 20 cents, 20 cents target exit price, right? 20 cents target exit price. And before it actually reached that target exit price, the price actually came down. Yeah, the price actually came down. If you actually look at Roblox yesterday, of course, Roblox yesterday, this is 1 minute chart. Roblox yesterday did not, I think it was up one something. It was actually up 150, right? It was actually up 150. Before that, I think it went up about $4, 450 or 460. Yeah, yesterday, and I think today is actually earnings. Today, after market is actually the earnings for Roblox. That's why we wanted to actually exit the position before the earnings. Hopefully, with the market up today, right? This counter would add another $4 or $5 so we can actually exit the position before earnings. And of course, I'm still bullish about this Roblox and the trend into metaverse. I mean, the trend into metaverse. I would say chances of it coming back up is actually high on the basis of the firstly, of course, the bullishness of the market today will add if Roblox give positive earnings, and also this forward prospects, right? They actually put in a good forward prospects. Then I think the stocks would actually how to say be quite bullish on this, yeah, because it has actually lost almost a lot from $150, right, all the way to about 60, about 70, almost 50% down from its high. I mean, this is the same for all tech stocks, even the big boy like Facebook, right? Even the Facebook has also faced similar challenges when they did not put up so good news, right? And the market has actually sold off and downgraded the stocks. Many analysts have also how to say put it from its buy list to either hold or sell, you see, yeah, for Facebook. And of course, hopefully, this is the the lowest point it can go is 217. Right now, it's actually at 217, right? Is 217, and of course, the is still hanging around, hanging. I mean, I would say maybe at 210 is the next support level, right, at 210. Hopefully it don't need to actually go down to 210 before it actually have a reversal up, yeah, because the I mean, there is actually a lot of how to say, lot of places to actually fill up this gap down of more than 20 over percent. I think now it's probably about 30% down. Yeah. So Facebook is one, and of course, if you believe that there is still value in Facebook, which we personally still believe there are actually value, and of course, the selling down is actually something probably overdone for big tech stock like Facebook. Yeah. Yeah. So yeah, Nasdaq again, as you see here, I would say it is actually quite positive. I'm actually quite positive that there can actually be a strong rally. But although I would say it might come in today, but again, based on earlier trend, right, the rallies won't last long. The rallies won't last long. So if you benefit from short-term rally, right, short-term rally, take profit, and of course, if you have opportunities to go in again subsequent to that, when it retraces from a sharp rally, right? I mean, once they have a sharp rally, of course, the retracement would likely come, and then of course that's where you can go in again in your positions. Yeah. So again, take profits if there are opportunities. Yeah. And sometimes it's also good to forego 20 or 30 cents um, just to catch the profit, like what we have actually done yesterday. But hopefully, what we have actually missed to sell yesterday, today would actually be better exit for us in our position for Roblox. Yeah. So these are the trend. Of course, this Nasdaq and also the S&P. Yeah. So right, so we will go back to what our topic, to X your capital, right? Okay, and one thing which I want to actually share with you guys, right? I mean, at the when we actually start to invest in anything, like, I mean, not only in trading, but basically investing in anything. I mean, in stocks, it's one, of course. In property, is one. In cryptocurrency can also be one, and of course, in order for you to invest, you actually have to have a capital. You cannot go away with this. Yeah, I mean, back borrow, don't steal lah. Yeah, you can have your own capital. You don't have your own capital, you can borrow your capital. You can borrow capital. Of course, if you borrow money, then of course the risk for you would be actually higher. Then you actually need to manage it a bit more. And of course, if you have your own money, that will be the best for you to actually set up an investment capital, your capital, to actually invest in assets, invest in assets. Yeah. And of course, for us, we are actually talking about investing in stocks and also trading in stocks. Yeah. And also for us, our focus is more also on trading options. Yeah. And of course, with trading, right? With trading, basically what we are actually expecting from investments or also trading, right, is actually returns. Okay, returns basically is the profit, the profit or the profit which you actually get from your investment or trading. So understand these key concepts here. And of course, the next question which we ask is actually about how much capital you need. Okay, and of course, the next one is what kind of instruments. Yeah, like I said earlier, it can be many instruments. It can be stocks. It can be options. It can be property. It can be crypto currency. Yeah. And then, of course, the returns, the question which we actually ask is at what rate of return? And of course, how much capital, it depends on you. I would say in if you're just starting, you probably need to it's best for you to actually start small. Yeah, you don't need to actually pump in a big size of capital at one go and then start to actually invest. In fact, that is the worst thing which you actually can do, that to start very big because you are not even how to say, familiar with the investment or the trading tool. You are not familiar with it. And of course, if you are when you are not familiar with it, and if you actually start big, right, that's the risk where you will actually lose your capital. You will actually lose your capital. Okay, so how much? As I said, start small, something which you are actually comfortable, because take investment as actually your learning process. Take it as your learning process, as if you're actually going to a university or actually going to school. You have to have this mentality, because if you don't take it as a learning process, right, the fear for many newbies, right, is that they go in with the intention to make a lot of money. Okay, and of course, when you start with the intention, of course that is our intention. I mean, we want to make money lah. But the thing is that you go in to say that you want to make a lot of money. Okay, so when you have that kind of expectation, right, that is where you will tend to actually how to say, bet bigger. That means basically you will actually tend to how to say, take more risk. Why take more risk is, of course, if you when you go in, if you are successful, that means basically if you start and let's say you buy some shares, for example, and the shares go up 10% or 20% in a short time, then that's where you feel that, wow, very easy. This is actually easy money. It's actually easy money. And that's the time where you say, okay, I want to buy more. I want to buy more. And of course, market is actually not so easy. Sometimes it is actually there to get you. It can also be a trap, right? Yeah, it's like they trap you in, right? It trap you in. They actually give you the return, and then you are very happy, and then that's the time where you get caught. Okay, when you get caught, and when you are not familiar, even on the risk management, and also the trading or the investing rules, right? That's the time where you might even lose a big part of your capital, or even all your capital. Yeah. So I would say a lot of people actually go through this process. In fact, personally, I also had gone through this process where I had also lost a bit of money, because when people start, they look at the market, they look at other people, they see, this is very easy, everybody seems to be making money. Okay, then they start. Okay, and of course, when they start, that's the time where they tend to how to say, take the wrong steps, do the wrong thing, and they start to actually lose money, and they feel that it is actually not so easy. And this is also a very big risk, because I would say the whole trading and the investing thing, right? If you do it correctly, all kind of structures or vehicle actually works. All kind of structures actually work, whether it's property, crypto, or whatnot. It actually works. But the thing is that before you are actually able to work it yourself, right? You get hit on the negative things or the losses, which makes you think that it does not work. Okay, so that is the biggest problem, that new people actually come in and then they lose some money and then they feel that whatever they are doing does not work. Yeah, and they actually get out of it, and they don't get into this how to say wealth growth through investment again. Yeah, and that's the very big mistake, because I believe everybody needs to have some form of investment to grow their wealth. Yeah, everybody needs it. Yeah, you cannot only solely rely on your income from your work or your business, or even for those people who don't need to work, right? Maybe they inherit some money, right? They cannot only rely on that. Yeah, so this is what I actually need to let you guys know, like, yeah. So how much that's start small. Then when you get comfortable in the investment tool or the trading tool, then you can actually grow from there. You can actually grow and add on your capital from there. And of course, what instruments, I say all instruments work. All instrument works. You just need to actually focus on something which you are comfortable at, and more importantly, something which you like. Something which you like. Okay, why I say something which you like is because one thing is very true lah. Okay, when you like something, right, you tend to want to learn more. Correct or not? Agree? So you guys agree with me? If you agree with me, give me a thumbs up. Yeah. So this is actually very true, and of course, when you like something, you will actually tend to be able to focus more, learn more, and also become good at it. Okay, I mean, can you imagine if, let's say, for example, I tell you to go and do gardening, okay? and and say you don't like to get your hands dirty. You don't like to get your hands dirty, and I tell you, you need to actually go and learn gardening, because gardening can actually help you relieve stress, and also at the same time you can actually make gardening your second source of income, because you can actually garden and grow vegetable, and you can actually sell this vegetable. If you don't like it, I would say, if you never get your hands dirty, whatever things you want to grow, I think they're probably going to die lah. Because you won't put enough soil in it, because you won't put enough fertilizer in it, you won't put enough water or nutrients in it, then that will is going to be a failed project. Yeah, but of course, the other thing, if you like gardening, and if you take care of your plants, if you take care of your vegetables, you give it nutrients, you pull out all the worms away from it every day, you take care of it, you talk to it, then of course your vegetable will actually grow very nice. And of course, if you are doing it on a bigger scale, then that's where you can actually harvest your vegetable to actually sell. Yeah, so that is just one very bad example. Yeah, so the same thing, if you are doing investments or trading, like say for example stocks, right? You have to actually have how to say, a liking to it. You actually have to have a liking to it. You actually in order to get the interest, and in order to actually learn the skills. Yeah, and when you have a liking to it, you won't treat it as if it is actually a work for you. You won't treat it as if it's actually a work for you, because you would actually how to say, look forward on Monday that the market opens, and you are able to actually look at opportunities to actually trade or buy stocks. Yeah, and of course, when the market closes on Friday, right, end of Friday, right, that's the time on Saturday and Sunday where you actually feel how to say, you actually feel very lost, or you don't know what to do. Because Saturday Sunday, no trading, right? Okay, and of course, if you have this kind of feeling looking forward for a Monday, and then on a Friday end, you it's like you cannot do what you love anymore on the weekdays. Then that's the thing where we say you will more likely thrive in this kind of environment. Yeah, I mean, if in the past many people actually dread to start the day on Monday, because why? Monday, what do y'all do every Monday? Most people, what do they do every Monday? Yeah, they have to wake up very early and to go to work ma. To go to work ma. So if you don't want to wake up on a Monday, and if you feel very tired waking up to go to work, right? I mean, you have to also think whether the work which you are doing is something you should love lah. If you love your job, right? If you love your work, right? You definitely look forward to wake up and go to work. Yeah, to wake up and go to work. Otherwise, yeah, as I said, you something might be missing lah. Something might be missing. You might not how to say, get satisfaction from your work. So I have actually done away with all this. Whether it is actually going to work, or whether it's actually the start of the week to trade, right? I always look forward to a Monday. And of course nowadays the full 7 days is actually very packed. Yeah, you work, and then after that you trade, and then after that on the weekends you actually make assessment of how to say, what you have done last week on your trades. You actually do some analysis, do some checks, and for me even more, I have to come up with content for our newsletter, which I issue every Monday. I have to actually also find contents to actually provide or talk to you guys lah. Yeah, and of course all these kind of things. You may find it a bit heavy, but at the end of the day, if you love it, it's actually comes in very second nature. Yep. Is good. So this is the thing, how much, what instruments, and what are the other last thing is what rate. So again, different kind of investments or different kind of trading, right, would actually provide a different kind of return. Yeah, so don't expect to actually see overnight returns, say from for example maybe investing of shares. Yeah, don't expect overnight returns of 50%. Okay, in doing investing in shares. But of course, if you are doing other instruments, like for example, if you are say doing, say, cryptocurrencies, for example, yeah, 50% return in a short period of time, of course it is actually possible. It's actually possible. Yeah. So all the kind of investment vehicle have different kind of rate of return. So this you have to actually understand. And if you are doing property investment, and if you are only going on investing in rental yield, then expect a very low return of, I don't know, maybe 3 to 6%. Yeah, don't expect to get 20 or 30% return annually, because that is another type of property investing already, not basically going for rental use. Yeah, so different, even in the same category of asset, right, asset class, you might have different kind of returns. Yeah, and of course if you don't invest, if you don't invest, and if you just keep your money in the bank, then of course don't expect to get any return lah, because that kind of returns, or the interest the banks give you, is basically nothing, because it is even lower than inflation rate. Yeah, lower than inflation rate. Okay, and the next thing you guys got to actually understand is that all of us actually want to grow our capital. And how fast does it take to grow our capital? We can actually use this, what we call a 72 rule. Yeah, and this 72 rule is actually I mean, it's just mathematics lah. I mean, what it is basically, in order to double your capital, right, with this 72 rule, you basically need to take 72 and you divide it by the return rate per period. Okay, for example, what this return rate per period is, for example, if you are actually doing a stock investing in stocks, right? So basically you get a 10% return a year. 10% of return a year. So in order for you to actually double your capital, right, you need to take 7.2 years, which is basically 72 divided by 10%, which is the return per period, per year. Okay, so 7.2 years to actually 2x your capital. And say for an to invest basically, then you see that okay, 10% return is actually applied to investing, and within investing, what kind of so-called securities or what kind of stocks which I invest is actually able to generate me this 10% return. So basically, you identify the so-called vehicle and so-called target instrument or instrument to actually give you this 10%. And then you have to actually also be satisfied that at the end of the day, you actually want to grow X amount of your capital. I mean, whatever that is, uh, 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 double it in 7.2 years. That means in 7 years, you want to actually double that amount of capital. Yeah. Then of course, if it fits in to your plan, that's where basically all these things which I've actually explained earlier, right? Where is it? As I've actually explained earlier, the vehicle, right? That means the vehicle, the trading, the returns, and how much you actually want to generate in X period. That fits into your so-called investment or wealth growth plan. Yeah. If any of these don't fit, then you actually need to either change the vehicle. That means basically, if you say 10% basically is very simple. Invest in the S&P index generally for the past 10 years. You would actually expect to get 10% return. So that's actually a very straightforward kind, for as an example. But of course, if you actually want more, then you actually need to do other things. You actually need to do other things. For example, if you actually want to generate a 20% return, okay, 20% return, investing in safe market indexes like S&P will not give you a 20% return annually. Yeah, of course, in the past, how to say, in the past 2 years ago, of course, the past year, you are able to generate that from the index, but over a long run, you are actually not able to actually do that in the index. Then, of course, you think, okay, in order for I want to actually generate 20% return, so what kind of vehicle or what kind of stocks should I actually target to actually generate this kind of return? And of course, one possibility is invest in high growth stocks. Yeah, high growth stocks. For example, I mean, companies like say Google, Amazon, what is that? The Microsoft, yeah, that will potentially be companies that might potentially generate you this type of return. Yeah, as an example. Yeah. So of course, then that is where you actually how to say identify the return and then look at what kind of vehicle or what kind of instruments can give you this type of return. And of course, the other thing is the capital which you have, how much money you need to have at the X number of years later. Yeah, if you want to have say $200,000 in 3.6 years later, doing 20%, right? Then basically you have to start with $100,000 in order to 2x your capital at the end of 3 or 4 years. Yeah. So with all these metrics, right? With all these metrics, you actually have to plan it out. You actually have to plan it out. Yeah. And then basically focus. Then basically focus. Yeah. Capital. How much capital you have now? How much capital you expect to how much how to say wealth or capital to grow lah at in X period of time, and what type of return which you need, and what type of return which you actually need to do that, to achieve that, and then basically focus on the vehicle that can actually give you this type of return. So it's actually an equation. You can actually change any of it, and of course certain part of it is a bit difficult for you to change because of limitation of resources. Of course, one is the capital lah. One is actually the capital, and then the other one is of course you might have so-called restriction in time. Like for me, yeah, I have restriction in time. I'm old already. Yeah, compared to a 20-year-old, 20-year-old teenager, right? Compared to a 20-year-old teenager, they might not need that kind of that high return. They might say, I'm comfortable with 10%. Yeah, because with 10% return a year, and if I actually start at 20, right? By the time I'm actually 30, if I have say only 10,000, say $10,000 of capital, right? I would have actually grown my capital to 100,000 when I'm actually 30. Yeah, and of course, if they have more, if they have 100,000 when they are 20, then it would probably become a million already before they actually reach 30 at a very conservative return rate. Yeah, for me, I'm old already. Yeah, then of course, I would need to actually tweak certain of these things. For example, the vehicle, I might actually need to actually get a return of 20% or more, because I want to cut short the time. I want to actually cut short the time, and with 20% or more expectation on return, right? So what kind of vehicle should I focus at and actually get involved in? Yeah, so that I can actually achieve my goals within X number of years. Yeah, so this is actually the fundamental, the secrets which you guys have to actually understand before even starting to go into anything. Yeah, you actually got to be very clear in all these things, and especially the vehicle which you actually get involved in, whether it can actually give you fulfill this equation for you in your investing life or in your wealth generation journey. Yeah, so that is actually what I wanted to share with you guys. Going back to basics again, and for you to actually understand this, so that it can actually guide you in your investing years, so that you don't get diverted with all the how to say, all the good things which people tell you how much they can make and all these kind of things. Yeah, because without having a base, a strong foundation of the understanding of how to actually grow this, how to actually work on this, what to focus and all, you would have a very, how to say, might fall into the difficult situation. Okay, Wani, great to see you again. Happy Chinese New Year. And you asked, what is the difference between investing in fraction shares versus buying one whole shares? Okay, investing in fraction shares, basically, for example, if you are actually doing how to say, Amazon, for example. Amazon is trading at $3,000. Yeah, so of course, in order for you to actually buy one share, right, you need to pay $3,000 to buy that one share. And if you don't have a $3,000, right, then basically you say, okay, I only have 300, but I want to be a shareholder of Amazon. I want to be a shareholder of Amazon. Then instead of buying 3,000 shares, you say, I buy $300 worth of Amazon. $300 worth of Amazon. So you are actually only owning a fraction of the shares. Okay, and of course, if Amazon goes up by 10%, right, 10%, you will also generate a 10% return on your $300. Okay, so it's actually the same. It's actually the same. It's actually the same. Yeah, you are owning a fraction of it. Yeah, because you cannot buy one. You cannot buy one. Yeah, but for me, I seldom actually buy fractional shares. I seldom actually buy fractional shares. Yeah. And of course, one reason for it is that when you actually buy fractional shares, yeah, the percentage is the same. The percentage is the same, but you have to you how to say, how to put it. I mean, Amazon have to actually go up a lot, right? In order for you to actually how to say, benefit from that small $300 investment. Basically, you're buying 0.1 share, 0.1 share of Amazon. Yeah, 0.1 share of Amazon. So for expensive stocks, if I actually want to invest, I would actually tend to buy at least one. Okay, if I cannot buy one, then I don't buy. I actually go on buying other kind of stocks. And of course now the opportunity is the opportunity is of course on Google. Okay, uh, uh, why Google? Why I actually pick Google out is because currently Google is actually trading at how much? Google three thousand $2,700. Okay, Google is actually trading at $2,700. Okay, and of course a lot of people would not have a capital. I mean, if you have a small capital size, right, 2,700 to get into one stock might already blow out your risk management in your stock portfolio. Yeah, for example, if you have $10,000 of capital, then 30% of it, if you buy Google, right, I mean you would have invested 30% into one stock. And of course we don't advise people to put 30% of money into one particular stock. Yeah, and now it's actually a bit different. It's actually a bit different now because of course Google, right, is actually they have actually announced a share split. They're going to split one for 1 to 20. Okay, so if you buy one Google share right now, right, when the share split completes, I think in 2 months time, then you would actually own 20 Google stocks. Okay, I mean it is actually very nice. I mean, in the past a lot of people cannot even buy one stock. Now you are actually able to own 20 stocks. Of course the value is actually the same. You just take $2,700 divided by 20, then that is actually the investment value. But it makes it more affordable for people to actually be a part of a great company like Google. Yeah, instead of $2,700, right? When it splits, right? Let's say it goes up to 3,000 lah. Yeah, because how to say, for the past stocks which actually undergoing share split, right? Pre-split, they will tend to actually rally up. They will tend to rally up, although current market condition is not letting Google do that lah. Yeah, because it went up by 10% post announcement, then it actually came down by 10% again. But if the market is how to say, is bullish, right? It's bullish after today, after my talk, after my prediction, not my prediction lah. I mean, after I see it, the market so green today, right? Hopefully, the stock goes to 3,000, and of course, when it's 3,000, then after the split, it will cost you about $150 to buy one Google share back. Then yeah. Fraction shares to auto to full shares times 10. Yeah, of course. I mean, you need to build it up, lah. I mean, you need to build it up. I mean, if you buy a 0.1 right now, and you continue to buy 0.1 share, you continue to buy 0.1 share, then eventually you will actually get up to one share when you build that up. But of course, I don't think all brokers allow you to actually buy fractional shares. Yeah. As far as I know, Interactive Brokers allows you to buy fractional shares. The others, I'm not too sure. I only know about Interactive Brokers. But of course, no harm also if you have how to say, if you want to build and you still want to get into these stocks, right? You can also build slowly, like you can also build it up slowly. Yeah. So it's just a preference. It's just a preference. Like I said, I if I can't get one, I won't get into it. I would actually prefer to choose other stocks. Yeah. Because there are so many stocks to choose from. You see, there's so many stocks to choose from. Yeah, for your investment. And of course now there are so many, I would say, stocks price which has actually came down, right? I mean, they are quite quite a number of stocks to actually choose from in the recent retracement. Yeah, in the past few trader stock we have also covered that. Yeah, and one which I would want to reiterate today is of course Starbucks. Starbucks has now been trading at about $93 already, 93. And of course, today I would think Starbucks would actually go up. If the market is still green, let's see, market is still green. Market is still green. Yeah, even higher. So if market is higher, I would say Starbucks would actually go. I would say it can actually go up today. Yeah, see, pre-market Starbucks is already going up by $1. uh $1 because Starbucks, I mean it is actually very much correlated with the market, especially S&P. Yeah, and of course when they have rallies, and when the market is actually green, right, most of the time I would say Starbucks would also tend to follow that kind of trend, especially now when Starbucks has actually came down from about 120 over dollars, right, to about 93 or $94 now. That's even more opportunity. And of course, I would say there is always a downside to everything. I mean, however good, however bullish I am to a stock, right? I mean, it can go down even more. Same like Facebook. I mean, previously when it was $230, right? When it came down to 230, I mean, people say, "Ah, 230 very cheap. Buy, 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 buy." I mean, even myself, I have actually put in some long-term investment in Facebook when it was down to 230. And of course, subsequent to that, Facebook has even gone down to about 215. Facebook is now at 217. It has actually gone down further. Yeah. And even better buy, right? Don't later you see it going down to 210. Okay, so all is possible. And of course, as long as you are comfortable with the stock, you see that the potential and the prospects is good. And of course, better still if you are a user of the product. If you're a user of the product, then of course, I don't think the chances for you to actually go wrong is big lah. I mean, if you are a user, if you're a supporter, I mean, of the product, right? And you know a lot of other people who also uses and also patronize the store, or or consume the product. That's the time where this kind of stocks you should invest in. Yeah, I mean, like I said last time, McDonald's, every week I eat McDonald's. So I tend to actually get invested in all these types. So in fact, most of my portfolio are the involve products which I actually use personally. Yeah, things like Microsoft, what is that? Adobe, Starbucks, Yum China. Yeah, Yum China has actually gone up a lot. Yeah, one day I remember, I think 2 or 3 weeks ago, you were only speaking about Yum China, right? So of course, Yum China has actually gone up to about 56 or 57 dollars, if not wrong. I think earlier it was actually trading at 40 over. Roll the money with higher ROI stocks. Yeah, I mean, higher ROI, yes, of course, they are fundamental ones. I mean, those which makes profit, the chances, I mean, not the chances, the probability of it going higher is a lot. Of course, if you invest in stocks which is actually a hype, and also solely based on so-called prospect with no earnings, you can get a lot of ROI in 1 year, and you can also lose a lot of ROI in another year. Yeah, like all the stocks like I mean, Teledor, Roku, what else? There are many of these kind of stocks which has actually lost more than Peloton, lost more than 50 or 60% of the value. Yeah, they give a very high ROI in certain years because of a hype, and also more people use their products. Zoom is also one during certain times like the pandemic, but post that the consumption actually goes down. Yeah, so these are not the so-called evergreen stocks which will grow year on year 15-20%. Yeah. Okay, so if you have any questions, post it and I can actually answer. If you do not have questions, then of course you can always post it on our Facebook page, and of course we can actually get it answered there. Alternatively, you guys can also email us at our email. Yeah. Uh, this email here. Yeah, I've actually posted that. You can actually email us, and of course, we can also post your questions during the next show if we are unable to actually answer it at our Facebook page. Yeah, and even if you are actually talking about any particular questions on trading strategy, any particular question on stocks, we will also try our very best to actually share with you what we know, and of course to try to actually help you guys to address. Uh, oh, Chai Huat have a very long question. Let me read the question here before I post because it's a very long question. Okay, I have a question. Let's say stock XYZ did a buy call on January 24th, expiry at pay premium 300, pay a premium of 5K as they passed, say, few month market went down, premium price, that strike price went down to 3K. Okay, okay, I'll just summarize Chai Huat's question because it's so long, is it? Okay, so basically, I think Chai Huat, you're actually buying a long call, and of course, it is actually say a 2 year lips, 2 year lips. Okay, and of course, during the time where you're actually holding the call, right? The stock price has actually came down, and instead of making money, you have actually made a loss of 200 2k 2k because the stock price dropped, and you're asking if you can actually continue to buy another call at the same expiry price to actually dollar cost average. Okay, this thing, of course, Chaiwa, you actually have to see, of course, the stock which you actually buy. What is your expectation of this stock? Will it continue to actually go up, or will it actually go down? Of course, if you are averaging it in, right, I would say you are expecting the stock to go up. Correct? You are on a long term, and you have actually 2 years to do it. Okay. One thing which of course, if the price goes up and if you average in, then you would make back the 2k which you lost, because the price would eventually move higher, surpass whatever price reduction which it had from your entry price. Like it went higher, then of course, assuming you still have a lot of time, right, then of course you would gain back the 2k which you lost. Okay, and of course, if you average it down, then of course that you would probably you will even earn more if the price goes up above your initial strike price. But one thing I would that is only on assumption that the price continue to goes up. Okay, one thing which I would actually caution traders is that option is a decaying asset. Option is a decaying asset. Okay, and if you and when I say a decaying asset, is that over time it will actually decay in value. Of course, if the strike price is continue to be higher, right, it has to be higher by also a certain value to actually offset the decay of the asset. For example, if the price you bought $300, right, and 2 years later it is $310, okay, you would definitely lose money, although the strike price is actually higher, because the premium which you pay for the options the decay is higher than the incremental value which you actually had. And this is very true nowadays. If you actually look at positions of many traders who has actually gone into long-term leaps for stocks like, say, for example, Roku lah. Yeah, yeah. During good times, yeah, you make a lot of money buying this long call, even leaps, you make a lot of money. Yeah, but when the price trends reverses against you, yeah, that's the time where you actually got to see how long duration you have left, and and whether the price can actually recover even in a bigger value above your strike price to actually offset the time decay that you had on the stock. Yeah, because if suddenly you buy a 2 year leap, you make say $30,000, for example, and suddenly you say you expect to sell off that in 6 months before expiry. Okay, say on the 7 month before expiry, the price crash like Facebook, crash by 30% just before your expiry. Okay, you will have a very painful and very painful position very sad because you already seen your portfolio and your profits go up so much, but just because the price movement is very drastic, close to the point where you actually want to exit, you will lose everything which you have actually how to say gained for the past 1 or 1.5 years. Yeah, so be very careful in actually treating options as if it was stocks. Yeah, because it is not stocks. Yeah. Yes, Xavier. Yes, yes, yes. I recall. Xavier is actually one person which I have actually spoken to during one of our coaching calls. Yeah, yeah. Okay, because you put your Chinese name, I don't recall. Yeah, Xavier, I know. Yeah. Okay, great. So this is one thing. Great question. Good question. Yeah. So hopefully you get what I actually wanted to say. Yeah. Okay, good. So it's 8:30, and of course, hope that the market goes up today, and hope you guys have a great trading week. Yeah, and when you are up, please take profit. Take profit because the last 2 weeks, 3 days, 3 days up, 2 days down. So this time, I mean, till Wednesday is my last point. Whatever happens, I don't. I mean, I would just take profit. Okay. Cut loss. Yeah. I mean, one last question. Cut loss. 25% for option. It depends on how to say, what are your trading rules entry rules yeah. And of course, if certain strategies itself, I can actually go up to 50% as a rule, as long as you are consistent in it. As long as you are consistent in it, you can actually set 25% or 50%. But I would say, because when the market is actually very volatile, right? When the market is actually very, very volatile, if you set a too low threshold, like say 25%, 20 or 25%, you might get stopped out very fast. Just like stock trading, during volatile times, you will tend to actually get stopped out more frequent because your stop loss is tight, yeah, your stop loss is tight, and the market volatility is actually very, very high. Yeah. Yeah. So this is also something which you actually need to take care in setting your stop losses. Too tight, more frequent stop out, and then later it goes on your direction. And if you do 50, I would say can also be a target, but make it consistent. Make it consistent, and according to strategies also. To sell, Andy, to close a sell put option, I need to buy call at same strike as expiry date. No. No, 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 no. You, in order to close your position, you always do the reverse of your initial entry. In order to close your position, in order to do the reverse of your initial entry, if you sold a put, to close it, you have to buy a put, same strike, okay? Not a call, okay? So these are fun, very important things. Don't do it wrongly. If profit above 50%, more questions. If profit above 50%, let profit run. Okay. Again, I would say depends on your strategy, and I would say nowadays, if above 50%, when I reach 50%, I would tend to exit and take profit. Okay, I would tend to exit and take profit. Okay, the situation might be different if you actually enter into. Why I take profit is because market is volatile. If you don't take profit, the profit can turn to a loss very fast during volatile times. If market is very generally trending up, if you are long, then of course there is it's safe for you to actually run above 50%. It's safe. But if market is volatile, it is not safe at all. Um, if you already make profit 50%, take profit. During volatile times, take profit and do a new trade and wait for opportunities to do a new trade. Yeah. And of course, the other thing is, if you have two trades, that means basically two or more lah. For example, if you have actually entered into a trade, two lots, you can take profit on one lot. That means you take profit on one lot, and the other one you let it run. If you are still bullish, if you're long, if to actually get more profits on the second one. Yeah. And of course, if the position goes against you, at least you have already taken profit on the first lot. The reduced losses, or even if you come to a loss on the second one, you will be able to break even on the so-called full trade of say two lots. Yeah. Okay. Yes, Andy, yes, buy put, correct. So to close it, reverse what you have actually done. Don't scare me, yeah. Don't scare me. Okay. Yeah. Okay. Yeah. So okay. So getting more questions, and of course, I mean, I'm happy for people to actually ask questions, because it's a learning thing lah. I mean, technically you don't need to actually know everything. You don't need to know everything. In fact, I don't know everything, and of course, if things which I don't know, and if you have a question, of course, I will also try to find answers. Yeah, but generally, I mean, the questions, I would tend to be able to actually answer lah, unless a very very technical structure which I don't even know. Yeah. Okay, great. Okay, all right. Thanks, Andy, Xavier, and also Wani for hanging on to our show. And I hope to see you again next week. And happy Chap Gourmet. Yeah, I am going to the lake to collect oranges. To collect oranges. Yeah. So if you want to join me, yeah, I will see you at the lake. Then we will go and collect some oranges from people who actually want to know me. What other strategies okay lah, last question lah. I want to go and throw orange. Okay, Xavier, what other strategies do you use? I remember I only learned sell put and sell call from you. I would like to accelerate ROI. Okay, the strategies which of course you learn through our initial course, right? It's actually an income strategy on selling of calls and puts, and of course there are many different type of option strategy, and And of course, I tend to actually use quite a number of strategies. I mean, the basic ones would be call spreads, put spreads. I mean, these are verticals, and of course, they are also more complex option strategies, omnidirectional strategies, strategies which have how to say low risk, high return, like a butterfly strategies which might have no risk to one side, say a broken wing butterfly or jet lizard. Many strategies. Of course, these strategies you can actually learn. Some of it we also talk about it during our sessions. And of course, if you have any questions on strategy, you can look at our earlier calls, or you can also how to say tag on to our options builder program, right? We have one options we have one options business builder program, options business builder program, where basically we treat multiple strategies, the basic one plus the complex one, so that it will give you a very encompassing how to say options knowledge, and then from there you can actually use it as a tool to build your wealth as a business. Yeah, that means you treat it as if it is a business. So this is our Thrive options business builder. Yeah. Does it provide TA? Yes, TA is also a part of it. Basically, how to say? I mean, we would actually encompass it within the training itself. On each strategy, basically, we will also cover technical analysis, so that it can actually give you how to say much higher probability by assisting with TA. I mean, the program is on the link earlier. I mean, you can actually go and review it. Any questions? Send me an email. Then basically, I can also help you go through it. Yeah? Okay, all right. So that's all. I know you guys have a lot of more questions. We will catch up next week. We'll catch up next week. And do get ready all your questions earlier. If you can email me, please email me earlier so that I can also put that on early. And if it is a complicated one, I'll take more time to actually answer. Yeah. So I'll catch you next week. Till then, happy Chap Gourmet. And for those single, I hope that you will be able to either throw an orange or catch an orange with a contact number, so that you can go on a date. Yeah. Okay, all right. So happy Chinese Valentine, everybody, and happy Chap Gourmet. I will see you next week. Yeah. And until then, don't forget to trade and thrive. Yeah. Bye bye.